on a specific sector in a while, commodity strength, and of course that story about the US dollar. You start the quarter with the horrible start to the year, more than roughly 11% down on the dollar. We're looking at the UDN, which is the bear inverse fund, not looking at the futures, looking at the financialization of the economy via the inverse bearish fund. We've moved since February when we first started talking about the idea of capital leaving the United States, moving to places like Germany, moving to places like Poland. Greece is the top performing country this year. Greece, that one. Meanwhile, U.S., not a whole lot. Right back kind of where we started to all-time highs from that February downturn. But you could see the UDN has moved from 1680 up to 19. And as I've said multiple times, when it comes to trading momentum around the currency, just focus on the 20-day EMA. Things above the 20-day, good. Things below the 20-day, don't worry about it. There will be a correction on this at some point. You will see some short covering on the dollar, but the UUP, which is that bullish fund that we trade, because there's no vol in this, it's very, very cheap to use leverage in the options on one directional play with these funds moving lower. Bad start to the year, and as we can see, everything else moving in tandem. Silver back up to 36.50, gold back to 33.65. Debasement, we talked about debasement quite a bit, and how the weakness in the dollar continues to be a major issue and major trend of this year. Palladium back up to 102, the ETF that we had recommended, talked about 2 weeks ago. After that move above the 200-day EMA and the 20-day EMA, I had given a handful of different entry points on this, including if we got back down to the 80 level, what it would look like at that 50 level at 92. I bought into strength at around the 97 level. And as I've shown on this chart multiple times, I like the way this is setting up for the long term. This big, beautiful bill is a dagger to clean energy, and obviously EV focus will be back in the EV focus as well. The energy EIA, Energy Information Agency, I think that's right. I haven't had any coffee yet, has shown that if you look and actually look at the research arm of the Department of Energy, they will tell you that gasoline will remain the dominant fuel for transportation here in the United States, which is bullish for catalyst converters. We're going to need more gas-powered vehicles. The emerging markets still heavily operating on diesel and gasoline. I like this long-term setup, very similar to the long-term setup that I liked on the SPY coming out of the crisis back in 2023. We're looking for that next leg higher. All right, so EIEIO, MGA marching along with it. This was another name that we had put in line here. Just go back to the daily charts, a little bit of strength. If you're going to try to trade the cyclicals on auto parts, again, we have a lot of trade issues that we have to continue to focus on, but your stop is right back here at either the 50 or the 20-day EMA. We break above that 50, that becomes your new floor. Mountain Mike, absolutely right. A deal with Canada would help MGA. A potential way to just simply trade this, just stay here at the 37 level. If there is I haven't really paid attention to the options chain on this, but just set a stop and just keep trying to re-enter at those levels and trade the momentum above the 20-day EMA. All right, so why do we do this every day? 8:50 in the morning. Still haven't had any coffee. Woke up. Didn't really sleep too great, but that's okay. Got a lot going on in this market, got a lot of rotation in this market, got a lot of things that we get to focus on, because as we get to the start of months and the start of quarters and we look at where money has been flowing, we want to look at what's been underperforming. We want to also be paying attention to the F and Graham score stuff that we will talk about momentarily. But if you're not doing this stuff with us before 9:30, this is a problem for you, right? We're going to actually give you the stocks worth engaging today. We're going to tell you about the safety in the markets through our momentum readings. We're going to talk about insider buying, and I'm going to give you my checklist, the stuff that I do every single day, right? Before we get to that, just quickly, momentum. Now, if we do this every day, and I always repeat it because I know there's somebody new here, And I don't want you to sit here and say, what are you talking about? What does momentum mean? There was an academic paper written in 2016, and has been a major influence of my trading and my investing and the way that I spot uptrends and downtrends in the market, short term and midterm. Effectively, what we are doing is looking at stocks that are breaking out in a certain pattern versus breaking down in a certain pattern on the S&P 500. If you have a bell curve of stocks and you were to look at the stocks that are only performing in very specific conditions on a weekly and monthly level and their betas, you take the numbers breaking out, you take the numbers breaking down, and that gives you a positive or negative number. If that number is negative, what we do is we start to pay very close attention to this, the FNGD. The FNGD is a leveraged ETN built around debt in the upper echelon of the S&P 500. What we're trying to determine is whether or not the selling is being driven by the biggest weights in the market. And if that is the case, that is problematic because, as we have seen, every single time that the FNGD for the last 5 years has really broken heavy above its 20 and its 50-day moving average, we have seen major liquidity or crisis events transpire. So this signal has allowed us to avoid every single downturn since COVID. That's where we first started tracking this. This is all built on my academic work over the last 16 years. Gosh, I'm getting old. That said, you go back here and you look here, that was the crisis that we had back in 2023 with the bond markets. This is the one that I paid most attention to. This is the Nikkei crash that we had last year. This obviously is the short-term spasm we had on bonds and the money markets back in April. And if we go back to 2023, 2022, this is the gilt crisis, which was a massive global financial crisis in England that ultimately led to the bottom of our liquidity cycle and Federal Reserve and many other central banks around the globe becoming more accommodative to these markets. Yes, we did have the Silicon Valley banking crisis in the process as well. We use a different tool for financial stocks when looking for breakdowns in the financial sector. Most recently, the big turn was February 21st. We had a sell-off. We got to a point where there were no breakout stocks. At that point, that tends to be where we see a squeeze in the market. We had one back to the 26th of March, and then we had a free fall into April. On April 8th, I said that we needed to start paying attention to what the insiders were doing. On April 9th, we saw some of the largest insider buying since December and record levels of buying on the TQQQ, which is the NASDAQ bullish ETF. And then we saw a policy shift, which ultimately led to this massive rebound that we saw in the markets from April into where we are back to all-time highs. So the key reason for this, I will share the paper yet. I have to make sure that I pronounce it right. It's multivariate analysis of reversal patterns, 2016 North Central University, J.D. Henning. That has been the primary form of momentum analysis that I do, in addition to Gary Antonacci's dual momentum investing and Grant Henning's value and momentum trader, which was written in 2009. Now, as I've said, in this environment, we have more stocks breaking out than breaking down. And as that works, I know, Hashpipe. I know. Well, this is what happens when they send you off to school and then you have to learn a third language. That coffee's terrible. All right. DRS, POWL, Urban, and CCL are the strong names that are in focus. As I have said time and time again, Carnival is just pure momentum. It does not matter what its fundamentals say. Nobody's going on a cruise, and if you are, don't go on a Disney one, because apparently a kid just fell off of it. All right, so here you go, back here in May. This is the type of moves that we see when capital flows back into the market. This is a proxy for momentum May $18 all the way up to 27. I continue to just advocate, look for these extreme lows on a company like Carnival. There are very violent moves to the upside. I'm usually not trying to short the stock unless it is breaking under its 20-day moving average, and especially if it is breaking under its 20 and its 50. For the most part, I like to look to the upside. I like to look for reversals. I am happy to stalk and not do anything in certain environments and just move down to one or two stocks, companies like, I don't know, NVIDIA, simply because they are predictable and I can just trade that, or I can trade the SPY based on my moves on the SPX. I am a very patient trader. I am very patient to look for these massive moves to the downside in the markets, particularly ones that are very highly predictable when we get into these negative momentum events. We have seen at least two of them a year. So I am constantly looking to buy the dip, and I am constantly looking for the policy change and the insider buying to confirm that it is time to go back in the markets. In the meantime, I will shift to intraday, and I will start to focus on the reversion moves of stocks like this that are high momentum that can move 5 to 10% in a day. All I need to do is really just center my focus and timing around the technicals and be very, very cautious in the process. Right now, Carnival is extremely stretched. What I will look for here instead is a deviation move, looking at TradingView, which I will pull up momentarily. In addition, POWL, we mentioned DRS, a name I have not seen in quite some time. That is Leonardo. Again, all of these stocks in the defensive environment continue to see a lot of strength, particularly due to the financialization and monetization in Europe. A lot more spending down the line. If you feel a little bit cautious about this, give it some time, add it to a watch list. This stock is back where we were discussing, just strong, smooth momentum, strong move up. And this is a type of stock that if it just keeps going, it just keeps going, it just keeps going, this can go parabolic, much like a Palantir did in the past. In addition, what is weakening? Adobe. Adobe has not looked very strong at all in recent weeks. And as we continue to look at this downturn in this stock, not able to get back above its 20 and its 50, if it meets resistance at that 395 level, it becomes a short and a possible move lower. It's not actually that bad on its valuation, but once again, it's just a matter of stocks not able to get off the mat despite all of the other technology stocks that have done very, very well, very, very weak. I am very mad at myself when it comes to this because yesterday I was on a call and at exactly 3:59 I tried to short Tesla and I didn't get it in until 4:00:03. I was 3 seconds late. And now Tesla down 5.8% on the day. The reason for that, again, paying very close attention to these moving averages and watching want as a result of this. This is where we start to see the kind of dislocation between a name like Tesla and the consumer discretionary stocks in a stronger momentum environment. But Tesla obviously is going to be in focus today because Trump and Musk are taking shots at one another. Really good opportunity for the reversion trades that we've talked about. And as we will mention momentarily, we're going to talk about the F and G score stocks, the FG20 stocks. ENQR, which is on that list, getting into focus. This is an ADR. This had a nice little pop recently and now has kind of pulled back under. This 20-day moving average, this Norwegian company, is going to potentially be a nice little breakout stock once again. So I want to keep a tight stop if we break above this 20-day moving average today. Not looking for a huge move, but just looking for something back, maybe to that 28 level, maybe even to that 27. The news around this, a new discovery, as is being mentioned in the Scott. TSLS, yes, that is precisely what the proxy is for Tesla on the short side, an inverse ETF. Tried very hard to get the $8 put for August for about 60 cents yesterday, I want to say it was, and I just missed it. So can't live in the past, got to keep pushing forward. And that brings us to F&G score stocks. Okay. It is July 1st. If you haven't checked your calendar, this year has flown by. And this is when did I start here? March, April, May. This is my 5th month. Awesome. All right. So 5 months in, and this is an opportunity for us to start to discuss just a different type of strategy that's very simple for people to learn and very simple for people just to get their bearings when it comes to understanding certain moving averages and how to trade things, particularly liquid stocks. Now, a lot of people want to trade options. I think that's great. But some people are just looking for an opportunity to try something a little bit different and to look for short term pops around quality, value, and momentum. So, as I've noted, the Piotrowski score, sorry about that. Let's get it bigger. That better? All right, hold up. Here. Boom. Just all you got to do is ask. We got it. All right. So, if you don't know, the Piotrowski score is 0 to 9. It evaluates a company's financial strengths using profitability, leverage, liquidity, and operating efficiency metrics. A higher score shows us strong fundamentals, especially for value stocks. Now, you know that I have discussed this time and time again. I am deeply concerned, as anyone should be, about value investors because for the last decade, the Federal Reserve's actions, the ongoing quantitative easing, the Treasury actions have created perverse incentives in the financial system. And I've said this a couple of times. If you really want to understand how absurd the financial system is, there are 5,521 stocks on FinViz that I can trade and invest in. There are now 4,307 ETFs. There were 4,100 ETFs a month ago. We are on pace to have more ETFs by the end of the year than stocks by the end of the year. Okay? So there's far more financialization and far more incentive to create ETFs on leveraged stocks than there is to actually create a company that produces anything. That's where we are. And there's going to be far more of these in the coming future. There's going to be a lot more financialization, a lot more short-term zero-date options. It's great for traders. It's phenomenal for traders. Keep pumping liquidity into the front end of the markets and just hook it to my vein. But I am still from that academic world that believes that at some point you have to go back to actual fundamentals. You have to actually understand that if you are a person who is deeply concerned about this type of thing and believe that eventually it probably will break, we will have to go back to things that actually matter. Put your hands in the dirt, grab the agriculture, pipelines, oil stocks. There are 30 stocks in the Russell 2000 in the energy space trading below their book value. I can't explain how insane that is. We simply are not enabling rational investment. But all that said, this is not a rant. The key thing to keep in mind here is that quality and value and momentum do work because occasionally you see a rotation to value that ultimately lead us out to an environment where some of these stocks can and will break out for any number of reasons, and because they are cheap, could very well become takeover targets in the future. So we've run this screen once again, high F score, and we look at this. We add the Graham score, which is the composite score based on Ben Graham's Intelligent Investor. I know they tell you if you're a first-time investor, read Ben Graham. Read Quality, Momentum, and Quality Value by Wes Gray. Read The Deep Value by Tobias Carlyle. Read those books. You don't need to read 400 pages and try to translate that. Keep it very, very simple. If you use the F score for quality, if you use the Graham score for value, and then combine that with something like the 20-day EMA or even the 20-day SMA, what you're looking for are short-term dynamic moves above support and resistance levels. We're looking for mean reversion. We're looking for short-term moves that can really break out. And they will be swift and Very, very impactful. And the beautiful part about them having that low gram number is just that they are cheap. These are real assets that can be purchased at virtually any time. So just keep this in mind. Now, as we look at this, we start to bring together a list. Stealth Gas is on this list. Costamare. A lot of shipping names are in this right now. But there are other names like Baytex Energy, BTE. Why is BTE an interesting name? Well, Baytex Energy Corp, right now, it's $1.80. But what we have right now is an environment where oil stocks are oversold. Or forgive me, where oil stocks are breaking down. We have a negative environment for energy. Okay, so what we're going to be looking for on a stock like BTE is for the OIOU, the Energy and Exploration ETN, to move to oversold. And if we move to oversold on both the RSI and the MFI, that becomes a reversion point for oil prices. And what we will then do is turn around and look at these little tiny names and look for reversion potential. As you could see, 223 took you up to 278. That doesn't sound like a really big move because it's a small number, but it's over 20%. I believe, again, you get above these levels, and if you just play the reversion and recognize that these are cheap names that are going to be trading according to oil prices and to broader E&P activity, you could do well because no one else is paying attention to this stuff. I promise you, not a lot of people worried about what's going on with BTE. And as we have shown right now, very cheap valuations, very cheap metrics. So we add this to the list. It becomes a momentum opportunity for us. General Motors is on this list. Now, I don't know how or what makes General Motors an intriguing investment in any capacity. This is largely going to be something held by pension funds because they have to. But it only takes one specific catalyst. And so long as this stock is above all three of these moving averages, that just becomes a trade. Because what we're looking for is we get up one morning, a trade deal happens, something happens, and we get a little bit of a pop. It's pretty simple, right? So the idea that, yeah, this is not just about the Magnificent Seven. This is not just about, the idea that we're trying to take advantage of stuff that a lot of algorithms are necessarily trading. Instead, we focus down in a much smaller sandbox where retail investors aren't really thriving and really aren't as focused as they traditionally should be. NC is an interesting name, right? NC, however, is already broken out. And as you're seeing in this list right here in this side, right here, and I'll make this available. I'll put this on an email. We'll send it out. There are names you're just looking around that 20-day moving average. And you stay above it, it's a buy. You stay below it, you let it go. And that is your line in the sand. And you just keep trying and trying and trying again. Right now, Greenbrier is on this list, GBX, and it's not really and necessarily about anything going on in industrials and railroads. It's just about the fact that this is cheap. It's just about the fact that it has very strong F-score, and it also gives us a natural exit. Once again, back here, 45.78. At most, you lose $100, but what's the potential upside? Well, a move back to that 200-day, and that's going to take you up to around 51. It's pretty clean. It's pretty simplistic, and there's not a lot of people focusing on most of these names. This is a $1.5 billion market cap company. It's profitable. It's not necessarily a long-term investment, but it is a way for us to look for lightning in a bottle. Baytex, as I've noted, 5% below its moving average. That just becomes a simple trade based on oil and gas. Methanex, and here you are, strong F scores all the way down, going at least to 7, price to gram under 0.8, breaking that 20-day moving average. That's it. That's all we're doing. And again, because it's cheap, it's a good way for people just to focus on things that matter and focus on a different way to trade and reduce your risk in the process, because you're setting that line in the sand and you try and you try and you try again. And momentum right now in eggs continuing to move higher. There was an article written, I think it was about Cal-Maine. Somebody stole 280,000 eggs from them and then sent them a ransom note. Pretty wild. Hey, Batman, what's going on? Hope you guys are doing well. GBX is reporting today. It's going to take us to our last brief conversation, right? So, key things that I always look for in the morning: insider buying to selling. And as you know, there's, insider buying to selling. When those things spike, when we get that spike, it comes back down to that one chart that I have called time and time again, the single most important chart in finance. In this situation, what we're looking at here is insider buying to selling in dollar amount. Okay. Okay. Okay, cool. Insider buying net. I was just reading Mark's note. Mark, I know that you sent me something on the reversion stuff. I have to get to that. I apologize. So, insider net buying to selling ratio is not very strong. We are at a new high. This is the S&P 500. That red line, you have the spike in the blue line. That is the 5-day moving average of insider buying to selling. That buying has coincided with the two very significant downsides that we have seen in the last 9 months. That was back in December, around the third Friday. In addition, we saw some tax harvesting. This is the trade crisis. So we are nowhere near anything that suggests bullishness on the insiders, and typically we don't see insiders buying at these extreme highs. That is an important chart to note. On top of this, we start to dig a little bit into what are insiders actually buying. So we look for CEO and CFO purchases over the last 10 days. Asana, ASNA, probably Dustin Moskowitz once again stepping in and buying more stock, this time at 12.96. This guy's had a very tough time over the last couple of years buying Asana stock, but nonetheless, continues to maintain exquisite insider control. Bit Digital, BTBT, that was a name that we brought up last week. And looking at BTBT, what we see here is a stock back to 224. We are looking and hoping for this stock to continue to break higher. As we said, we did make a recommendation on it based on that recent insider buyback at $2. Just another way to play Ethereum and play the ongoing Genius Act. There is a catalyst there, and we will be looking for strength to return. If you feel a little late to this, just wait on the RSI and the MFI to start to show some strength around that 55 level. Okay. Thanks, Mark. I appreciate it. I haven't had a chance to dig too deep into it, and I know we have the capacity to share that. 13Ds, meanwhile, not a whole heck of a lot of new information out there, but we'll take a quick look. WBD, pretty big purchase, 98 million shares from Advanced Newhouse Partnership. So WBD will go on the list, and we'll take a look and see what is going on here, see if we have any reason to try to trade it. This has been a strong, nice move. Again, this is a momentum-driven market off of that May 1st move. Over the 50-day moving average for the S&P 500, strength across the board. Not really sure what's driving that purchase, particularly in an overbought environment for WBD, but I'm sure there is some catalyst that I'm going to have to look deeper into. EFOI is up here as well. EFOI, don't know much about EFOI, but if it is upstream, it should be in focus, energy focus. Nope, that is a consumer cyclical stock. I have no idea what you do. I'm not even going to bother. Finally, on top of the 13D side, so Berkshire Hathaway stock, Buffett selling a couple of shares, just a few Berkshire A shares. Guy only owns 198,000 of those shares. SATS, everything else is kind of energy driven. In addition to this, what stocks are breaking down, we'll go over to TradingView for that list, and we have that screener up that we have produced. Stocks that are in breakout mode, breakdown mode. Let's skip over Momo breakouts. So Dominion, once again, back where we were yesterday. Humana, HUM, Williams-Sonoma, still above those key lines. RSI over 48, MFI over 48, positive MACD, and above that 20-day EMA. Cash, back in focus as well. We've got 41 names here. We'll do our best to start trying to share this screener. And MAS, I have not seen that name in quite some time. Stocks breaking down. Diamondback, still where we were yesterday. We talked about Diamondback as a breakdown stock. Energy names now negative. Apache becomes a short. Rig is under pressure. Halliburton as well under pressure. Not going to take a whole lot to the downside on Halliburton. 19, probably the biggest potential downside there in the short term. High peak HPK as well, weakness, and SB moving lower. A lot of biotech stock names. I do not trade biotech, but I do watch the LABU. LABU does remain strong at this moment. It's just a little cheat for you on LABU. Always pay attention to this. If this is breaking out or breaking down, it's been trading sideways, but historically you can see the violent swings in this leveraged ETF. This is a very good proxy for broader biotech momentum. So if the LABU is breaking out and you see insider buying alongside that on a smaller cap stock, becomes a good speculative play to the upside. Last thing is back where we always go to. Same trade, same reminder, same thing to set you guys up for success today. You guys are following a lot of things at the same time every single day. And it's very important that if you have an extra screen handy, just keep this open all day. This is the S&P 500. We're looking at the SPX. The SPX is the S&P 500 metric. And as I've said, I don't know how and I don't know why, but we do have this volume weighted average price for the S&P 500 for the SPX. And we use the deviation bands of volume weighted average price to look for reversion opportunities. Yesterday, we had a very short tick off the bottom of the third band. That is not enough to get us excited. The general rule here, the very simple rule here, is you are looking for the S&P 500, the SPX, which I know doesn't have volume, but this is likely built on the back of futures and likely built on the back of options to come down here and get into the fourth deviation. This goes back to Stanley Druckenmiller's lesson about the lack of trend in the market back in 2018, and with more algorithmic trading than ever, and all of these kind of headline-driven events that can transpire, when you have these moves down into this band, it becomes an opportunity to switch over to the S&P 500 Spider ETF and buy whatever is in the money and keep a tight stop, 10%, 15%, 20%, but you are looking for a reversal. And as I did on Friday, I had a short 30, 40% win in about a couple of minutes just trading this. The thing that's so important to understand, though, is that if I would have held it, it probably would have been much, much higher. But as you can see back here, there was a trade recently just built around this where we had a big sell-off. I think it was the day that Jamie Dimon came out and talked about the bond market, or it was the day that Iran fired missiles and didn't hit anything. But the in-the-money call on the SPY, when the SPX hit that band, it went from $2 to $7.20, right? And Secret Agent Charlie talking about how he used going 3 for 3. So my gift to you, once again, we will continue to focus on ways to do this because this becomes another tool for other types of stocks that we want to focus on. Other types of things. And tomorrow, I'm going to be having a deep conversation about the one stock that you can trade using a strategy like this, just tracking the SPX and a variety of other things. If you can master just this one stock, I assure you, you can master the entire market. So you'll see some notes about this. Sign up. I cannot wait for this conversation tomorrow afternoon. It is 9:20. Brandon and Don cage match coming up at 9:30. I hope everybody has a great trading day. I will be back at 12:30 for about 45 minutes. Just again, keep an eye on that SPX and have the best trading day of your lives. All right, everybody. Thanks so much for your time. I will be back if I don't see you at 8:45 tomorrow for TheoTrade Market Masters. Have a great day, everybody.